Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BETA BIONICS INC quarterly report. BETA BIONICS Inc. offers a range of innovative medical devices and services for people with diabetes. Their products include iLet Bionic Pancreas, an insulin delivery device for type 1 diabetes patch pump, an insulin pump that adheres directly to the skin by hormonal iLet, combines automated delivery of insulin and glucagon iLet for type 2 diabetes. A treatment option for people with insulin-dependent type 2 diabetes. The company also collaborates with other organizations, including Xeris Pharmaceuticals, Inc., to develop a pump-compatible glucagon formulation. Abbott Diabetes Care, Inc., to develop an automated insulin delivery system. The fluctuations in BETA BIONICS, Inc. BBNX stock price over the past year can be attributed to several key events and updates. The company's strong third-quarter results, which included a 63% increase in net sales and a significant expansion of its installed customer base, led to a 13% surge in stock price on October 28, 2025. Additionally, the upward revision of full-year 2025 guidance further boosted investor confidence. Regulatory updates, such as the special 510(k) clearance for the iLet Bionic Pancreas system, also contributed to the company's growth and stability. Furthermore, clinical trials, including a glucagon PK/PD trial and a New Zealand feasibility trial, demonstrate BETA BIONICS' commitment to innovation and its potential for future success. While the company reported losses in 2024, its revenue increased by 443% year-over-year, indicating a promising trend. The Q3 earnings report also exceeded expectations, with revenue surpassing the Zacks consensus estimate by 13.96%. These factors collectively suggest that BETA BIONICS stock price movements are driven by positive developments and growth prospects, rather than remaining stagnant within a narrow range. The primary drivers of revenue growth or decline for a company can be categorized into several key areas. Regulatory compliance issues, such as product recalls and changes in government regulations, can significantly impact revenue. Product development and commercialization efforts, including successful clinical trials and marketing authorizations, are also crucial. Supply chain disruptions, changes in customer demand, and regulatory requirements can affect manufacturing and supply chains. Effective management of growth through personnel integration and sales and marketing efforts is essential for revenue growth. Financial and accounting factors, such as changes in financial standards and ESG expectations, can also impact revenue. Litigation and regulatory proceedings, including compliance issues with healthcare laws and regulations, can result in significant penalties and fines. Economic downturns affecting healthcare spending and customer attrition rates due to switching to less costly therapies are other key drivers of revenue growth or decline. Net income and profit margins experienced fluctuations over the period. Initially, net income decreased due to increased fair value of warrant liabilities and stock compensation expenses in Q4 2024 to Q1 2025. However, it improved in Q3 2025 due to higher revenue, improved margins, and operating leverage. Profit margins also saw changes, with gross margin decreasing from Q4 2024 to Q1 2025 due to a shift in channel mix. Nevertheless, it improved in Q3 2025 due to increased sales volumes and better manufacturing cost absorption. The decline in net income can be attributed to reduced sales growth, increased competition, and higher spending on product development and marketing. Profit margins may face challenges from manufacturing delays, defects, and increased costs of components and labor. Key numbers show that gross margin increased from 53% in Q3 2024 to 55% in Q3 2025, but decreased from 60.6% to 55.5%. Operating expenses as a percentage of net sales also decreased from 162.1% to 117.7%. The company is experiencing financial difficulties, as it has been generating negative operating cash flow for 2 consecutive years. The net cash outflow from operating activities was $42,298,000 in 2025 and $33,994,000 in 2024, indicating a significant drain on the company's resources. This trend suggests that the company is struggling to generate sufficient cash from its operations to meet its financial obligations. Management is expressing concerns about various risks that may impact the company's outlook and strategy. Key areas of concern include regulatory actions from the FDA, compliance with healthcare laws, and potential losses due to termination of license agreements or patents. Financially, management believes significant additional capital is necessary for operations and product development, which will likely involve dilution of stockholders' ownership interest. Operational risks are also present, including difficulties conducting clinical trials outside the U.S. and compatibility issues with ICGM devices. Management's concerns suggest a cautious approach to business growth, with a focus on mitigating potential risks and ensuring compliance with regulatory requirements. The company appears to be prioritizing financial stability and operational efficiency over aggressive expansion or innovation. The company's financial summary reveals that it has not distributed any dividends to its shareholders. Furthermore, there is no record of the company engaging in share buyback activities. This suggests a focus on reinvesting profits within the business rather than returning value to investors through dividend payments or share repurchases. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory levels have increased by 53% since December 31, 2024, with raw materials and work-in-process inventories rising by 36% and 92%, respectively. This surplus can lead to reduced revenue due to potential defects in complex product design and excess inventory, affecting gross margin. Supply chain disruptions are also a concern, particularly the reliance on single-source suppliers that could cause significant production delays. Identifying alternative suppliers is challenging, and fluctuations in demand for products manufactured by suppliers may impact their ability to deliver components. Additionally, natural disasters or unforeseen events could disrupt supply chains by preventing access to headquarters or manufacturing facilities. These concerns highlight the need for a more robust inventory management system and diversification of suppliers to mitigate potential risks and ensure business continuity. That concludes the financial summary for BETA Bionics INC. Feel free to comment below, and I will be happy to answer them when possible.